Welcome everyone. In today's video I wanted to talk about all of the important items that happened in the Solana ecosystem last week, and the first one comes from UXD. So UXD is a new algorithmic stablecoin here on Solana. They went live on Mainnet about 2 weeks ago, but now they are allowing users to mint UXD with Bitcoin. So you just need to go to the website, hand over your Bitcoin, and they will give you an equivalent amount of UXD in return. So previously they only had Sol as collateral to mint UXD, but now they've extended it to Bitcoin, and you could probably expect in the future like maybe ETH being added to that as well, but we'll see. So there is a big push for UXD adoption right now, so you will be rewarded retroactively with UXP rewards if you do a couple of things. So you can go ahead, go to Jupiter Aggregator, swap out some of your stable coins for UXD, and then go to Saber LP in the UXD USDC pool. It's currently giving you out almost 14% APY. Mercurial Finance, they have a UXD pool which gives you currently 22.26% APY. And if you take your Saber UXD USDC LP tokens to Sunny Aggregator and stake them here, you're getting roughly 13% APY. And if you do all of that, you will definitely get rewarded with UXP tokens in the future. So not only are you yield farming and getting a decent stablecoin APY, you're going to get a retroactive airdrop in the future as well. The next item comes from Hubble protocol. So they say here that the contracts are deploying on Mainnet since yesterday, so they're a few days away. Stay tuned. So I should expect maybe next week, like the first week of February, we will see Hubble protocol live on Mainnet. So Hubble protocol allows you to deposit collateral there and then mint a stable coin against it, and I think it's like a zero interest loan that you take there. So it's interesting, and we've seen this model work on Ethereum before. So Liquidity, for example, does a similar thing but with ETH. So it'll be interesting to see how Hubble handles this. So the next item comes from Zeta Markets. So they put out a tweet here: Zeta X Ribbon, welcome to Solana Ribbon Finance. So Ribbon Finance is partnering with Zeta Markets to launch their structured products on Solana. So essentially they allow you access to option strategies. So we already have that here on Solana with like Friction, Katana, Chest, and Tap Finance. So Ribbon Finance is just it's coming in and deploying here, but they're very but lots of people use Ribbon Finance on Ethereum and Avalanche, so it just makes sense that they're going to Solana as well. So how will it work? Ribbon will leverage Zeta to facilitate block OTC trades, providing a central and clean way for composing projects such as vaults to mint options and auction them to market makers. So premiums earned from the sale of options are then paid to vault depositors, and settlement is cash settled at expiry. So this will be available for Ribbon users on the 11th of February 2022. So you got about 2 weeks before you can actually go ahead and get access to these vaults. So the next item comes from Invictus DAO. So they've introduced locked staking. So there are now 2 pools that you can be in when you're staking your in tokens. So you have the locked stake, which looks like this, and then you also have the staked in, which is looks like that. So locked staking has been a request from the community to deter the effect of cyclical bonding, where predatory users on the event of a new bond offering would unstake their in, sell for the bond offering pair, and rebond in at a discount. This is a unique problem to Sol Invictus, as dynamic rebasing and low fees mean that a user will have full access to all of their staking rewards at any given time and can easily deploy them for predatory means. So they introduced this lock staking mechanism in order to stop that. So lock staking will be the most optimal way to retain your percentage ownership of the network, as the lock staking APY will be higher than both regular staking as well as bonding plus staking APY. So if we just take a look at the Invictus DAO page, this is what it will look like. You'll have the single stake and lock stake. So the lock stake is currently giving you out 32,000% APY, whereas a single stake is giving out like 12.7,000% APY. So if you're in the single stake pool, you are getting diluted away, and I don't really see the point participating in Invictus DAO if you're only going to be single staking. For the most part, if you're in it for the long term, you should be in the lock stake pool. Otherwise, you are getting diluted and you're losing money over time. So there's going to be a 5-day unstake period for locked staking. So during those 5 days, you'll be placed in the regular staking pool, earning a smaller APY. And there's also an unstaking fee, so you can pay that if you want to skip the 5 days. However, you are paying up 10% of your in, and that's distributed to the locked stake in holders. So that's interesting. So more from Invictus DAO, they've introduced a governance forum, so you can go ahead and check it out. Now that they've transitioned more to like a formal DAO, they have the governance forums here. So there's many things that people want to discuss, and one of the biggest ones is redemption of Invictus assets and the road forward. This has been one of the most contentious DAO discussion things here. Like a couple of whales have come out and, you know, voiced their opinion on this, and I think if it did go through, they would stand to make a lot of money. So I think they provide some interesting arguments, so go ahead and check it out and discuss on the forums. Although I think they are holding off for now, but it is something to think about. The next item comes from Solend. So basically they put out this post talking about the liquidations that happened last week. So from Jan 21st to Jan 22nd, Solana experienced degraded network performance, causing many Solend transactions to fail, which ended up meaning that lots of people got liquidated because they couldn't repay their loans or deposit more collateral. Additionally, there was some erroneous volatility on the price feed, which caused wrongful liquidations. So some users would supply MSOL and then borrow SOL, and they were liquidated due to prices moving out of sync on the PIFE oracle. So basically, when the market crash happened, lots of bots came out and they spammed the network with duplicate transactions, and that meant that most regular people who were trying to use Solana couldn't get a transaction through. So Solend is taking a couple steps to, you know, mitigate issues like this in the future. So they're going to disable pre-flight checks on Solend Finance, increase staleness tolerance, remove dependency on oracles for deposit and repay, and have a liquidator whitelist. And they're also planning to actually take some actions to reconcile problems encountered by users. So they'll reimburse 100% of the penalty fee for users liquidated due to abnormal volatility in the SOL feed, and they'll reimburse 50% of the penalty for other liquidations. The next item comes from 01. So 01 is a brand new DEX here on Solana. So decentralized derivatives, so you'll be able to trade perpetual futures and power perps. I think 01 warrants a video of its own fairly soon, but essentially what you can do, you can trade perpetual futures right now. You can trade SOL perps and Bitcoin perps, and it's very similar to Mango Markets in the sense that it's an order book DEX versus Drift, which has a virtual AMM. So 01 allows you to trade on an order book, and it also allows you to deposit various different types of collateral to trade against. So you have USDT, USDC, SOL, and Bitcoin, I think, right now are the collateral types you can trade against. And when you deposit them into 01, they automatically start earning a deposit APY. So that's really cool as well. So power perps will be coming soon. They're not quite out yet, but they offer some interesting trading strategies. So essentially it offers leverage without risk of liquidation, so I'm quite excited to use the power perps. So with 01 coming to Mainnet, there's a cool trading strategy that you can do. So you see here that the funding APR on 01 is negative, meaning that you can get paid to go long Solana perps on 01, and if you go to Drift, it's actually positive, meaning you get paid to go short Solana perps. So you can create a delta neutral position by going short the SOL perps on Drift and going long the SOL perps on 01. And that's currently paying out, if we take 57 plus 86, so let's just say about 130% divided by 2. So you're getting about 65% APR on a delta neutral position. So essentially it's a 65% APR on a synthetic stablecoin position you've created there. But obviously there are risks involved, such as the funding rates moving and the fact that there isn't actually a lot of liquidity on 01 right now. But it's an interesting strategy nonetheless. So thank you for watching. I hope you enjoyed this video, and make sure to subscribe for more videos like this one.